Most institutions think a tokenized product can be safe once it clears a risk committee. But what if the framework they're using to evaluate it was never built for what these products actually do under stress? Zach Zukowski is the founder of Tokenization Systems. He spent 6 years at Borderless Capital building the firm's research function, and today he publishes independent research on stablecoins, tokenized assets, and the infrastructure behind digital money, including work prepared for the Federal Reserve Bank of New York. Zach, welcome to Token for Your Thoughts.
Hey, Lizzie. Thanks. Great to be here.
Yeah, it's great to have you on today. I'm looking forward to digging into everything tokenization. But before we start, it would be great if you could tell us a little bit about yourself and your background, and what were you doing before the world of crypto?
Yeah. So before crypto, I was always really into markets and technology. Uh, my interest in stocks started when I was around 10. I think someone at school was talking about some stocks, and then I started asking my dad questions about how it works. And when I was 11, my dad gave me and my brother $500 to invest in the stock market, and I
Oh,
instantly
how cool.
yeah, it's one of the coolest things that anyone's ever done for me. I think because it inspired me to get really interested and spend a lot of time learning about the financial markets and uh, how they work. Uh, so while everyone else was in the computer lab playing video games, I was on Investopedia learning about bonds uh,
Oh my
like
goodness.
looking up all the different companies that existed. Um,
Wow. And you were 10.
yeah, it started when I was 10, and then by 11 I was trading. Um, I've started in the more active trader side of things, like day trading. And my brother took it the easy way and bought Tesla and just held on to it. Uh,
Oh,
and
okay.
it, it- and what I've learned over time is that it, for day trading, you can get to a peak where you can understand technical analysis, fundamental analysis really well, but then the marginal value that you get from the time that you spend watching the charts and the stress that it puts on you, needing to be aware of the markets all the time. It's not worth it for a lot of people.
Mm-hmm.
Mentally and financially. For most
Okay.
people, the algorithms are out there to win. They're built to beat physical, like human day traders. So I've
Okay.
moved into a
Yeah.
more long-term investment
Mm-hmm.
thesis since then. Uh,
Okay. Do you remember what areas sort of piqued your interest with that first $500, like the kind of companies you decided to invest in?
the first stock I bought was Ford because that was one of the biggest brands that I knew. I've always been aligned with investing in companies that I know and am familiar with and want
Mm-hmm.
to be successful and stick around over the years. So it was mostly names, or it was always names that I knew exactly what was going on in the company, what they were doing. I was reading their quarterly reports and listening to the earnings calls, trying to get as much of a inside scoop
Mm-hmm.
as I could on them. Um,
Wait, this is when you were still 10 or later on?
I think I moved into the quarterly reports around 15 or 16.
Wow. My goodness.
Yeah.
Right. Yeah. So you were
Um,
like doing your due diligence.
Yeah, I always I really enjoyed it, being able to understand kind of what moves the markets and the metrics that investors and capital seek in order to predict which companies are likely to outperform. It's a big game of poker,
Hmm.
where the odds are, um, they can be skewed in your favor if you can put together the different pieces of the puzzle to understand kind of the system that that directs capital around the world.
Yeah, absolutely. Okay, so you definitely got an early start then into investing. What happened next?
So I've created a few entrepreneurial ventures through my middle school and high school years. I was buying and selling undervalued used electronics on eBay, Amazon, Craigslist, and it sold a few thousand of those over around 6 years, and that became like my main source of income. Um, and then when I got to college, eh, my plan was to be a stock analyst likely out of a bank or financial manager,
Hmm.
uh, uh, doing this same thing. Um, and that was until halfway through college, my third year, where I learned about Bitcoin for the first time. Um,
Okay.
yeah, it
Well,
started at internship. It was from an internship that I had. I was working at a consulting uh, company called Greenway Solutions, and we were doing this project for USAA, that fraud or measuring fraud metrics across banks. So we tested 12 of the major banks in the U.S., like seeing how fast the funds became available when you cashed a check, whether it be a fake check that bounced, and how fast you were able to transfer that out of the account. Uh, and then uh, also like measuring what type of PII or personal identifiable information you need to reset your password, uh, and like whether that be security questions or calling customer support, or we had this whole list of things that we measured, and then we delivered a report back to USA showing how they ranked against all the other banks, um, to help them improve their security. But one of these days, during the internship, I went to a fintech pitch competition with my boss at the time, and uh, there are 10 entrepreneurs that were pitching their ideas for startups, and one of them was this digital identity that you're in control of and you can use to prove who you are online without revealing too much information about yourself. And he was pitching it for like social media applications for people to know that they're talking to the real person. And one thing he said was, and it's all backed by the blockchain. And my boss looks at me. He's like, Zach, have you ever heard about the blockchain? And I'm like, no, but I'll take a look at it and let you know my thoughts. So I did. And that night I came across Bitcoin and I read the Bitcoin white paper and thought it was the coolest technology that I've ever seen.
wow.
Because it was an overlap with a lot of the passions and interests that I had growing up with technology and markets and kind of coordination for how people work together. Uh, and it instantly became like my favorite thing, and I just dove right down the rabbit hole.
Hmm.
Um, so I wrote a report for my boss explaining what Bitcoin was back in 2016, and then I went on LinkedIn and searched for anybody around me that was into blockchain or cryptocurrency, and I found this guy named Bart Kant, He was the head of blockchain at IBM at the time, and I reached out to him, and he lived in my city in Charlotte, North Carolina.
Ah,
So I reached out to him, asked if he was open for coffee, and he was. So we
nice.
met for like an hour and a half, uh, and I got to ask him all the questions that I had about blockchain, which I highly recommend anyone that's new to the space do. I think it's super important to have somebody that you trust uh, that knows a lot about the space, so that you can ask questions um, without kind of being deceived, because there's a lot of anonymous people or people that you don't know that are trying to teach you stuff without the right intentions, especially in the crypto space. So if you have a friend that you trust knows a lot about the space, you can you can learn a lot faster and kind of catch on to how it all works much faster than you can just researching it all yourself. So that's uh, uh, that's how I first heard about Bitcoin and cryptocurrency and blockchain. Uh, and so by the time I was in junior year, uh, I I started getting interested in kind of tinkering around and trying like trying to set up mining,
Oh, okay.
and so I figured out that my school's computer lab had 10 really nice computers with great graphics cards, and most of them were not being used a lot of the time. So I figured out how to install miners on all of them and turn my school's library into a mining farm.
Oh my
It,
gosh, this is great.
and the tough part about that was I needed to have my account logged into the computer in
Mm-hmm.
order for the miner to be running. And whenever some another student would come and use the computer and log me out and log themselves in, I would need to
Ah,
go and log back in
okay.
on that computer. So I would go to the library like 3 times a day to like in between classes to check
Oh
on
my
my
gosh.
minors. My parents are calling. They're like, "Oh, Zach, how you doing? Where are you?" And I'm like, "Oh, good. I'm just at the library." And they're like, "Oh, yeah, such a great kid."
Oh my gosh, that's
uh,
our boy.
yeah.
That's great.
um, it, so that lasted for about 3 weeks until the administrators of the library found out that something was going on with their energy bill, and
Oh my gosh,
uh, uh,
that was going to be my
um,
next question.
yeah, so they never came and talked to me. I never heard it from anybody in person, but they did start requiring administrator password in order to run any apps on the computer.
Ah,
So
okay.
after 3 weeks of mining, that was about what as far as I could get in the lab. Um,
Okay. It was a
yeah,
good run while it lasted, I guess.
it was good. And this was in 2017 during the ICO boom, where like hundreds of new coins
Mhm.
were launching, and a lot of them were making crazy returns, like 50 times, 100 times. Some
Oh
did
my gosh.
1,000, uh, and in days or weeks. Uh,
Wow.
um, and one of the coins I was mining, it was called. Well, there were two. There was like Pascal coin and Raven coin, which were like started mining before they were even trading on any exchanges. And uh, at the time, the main exchange was this one called Poloniex. It, and whenever they listed a coin, the price would be super high at first and then usually crash like 90 to 80% over the next day as more supply came and hit the market. So at 3 a.m. one night, one of the coins that I mined hit Poloniex, and I get this text saying, "Oh, like new coin listed," and it's the coin that I was mining. So I was like, "Oh, I've got to get to a computer like ASAP so I can transfer my coins from my flash drive." Uh, and I had a MacBook that was my laptop, but I had set up the flash drive on the Windows computer in the library, and the
Mm-hmm.
flash drive didn't work with my Mac. So
Oh no.
I was like, oh, I got to find a Windows computer as soon as possible. So I knew one of my dorm mates had one, and it's 3 a.m. And so and I'm like super excited and energetic, and I go up to him, and I've never really I've talked to him about crypto before, and I pitch him trying to get him to let me use his Windows computer to so I can transfer the coins. And I'm like, yeah, like I've got all this digital currency on this flash drive, and all I need to do is plug it into your computer, and then I can send it to the crypto exchange, and that's all I got to do. And he's like, I'm not going to let you plug that thing into my computer.
Oh
So,
no.
I I start sprinting to the library, and that takes like 15 minutes, and I have my wallet address in the exchange written down that I've got to send it to, and I'm able to do that and plug it into the desktop and transfer it, and then it takes about 2 hours. It took about 2 hours for that transaction to confirm.
Wow.
So I'm lying down in my bed at like 5 a.m., eyes closed, with my finger on the
Yeah.
enter button, with the exact amount of coins that I have, like, hitting sell, uh, just waiting for the transaction to be confirmed, and like half sleeping. And it
My
finally
gosh.
happens. I get out at a great price before it crashes another like 70%.
My goodness.
And so that mining, that computer lab, it paid off.
Yes.
Um, so yeah, that's a few stories about how I got
Wow.
into crypto.
Yeah, that's an incredible story. Yeah, when you said that you came across Bitcoin midway through college, I was like, oh, really? It was on the curriculum, but you're like, oh, it was through an internship. And I guess it was an event you went to with yeah, you said your boss. So like, okay. So what were you studying at college out of interest? Was it something to do with traditional finance or?
It was business administration,
Okay.
entrepreneurship. I was I was the president of the investment club at the school, and um, I was also involved with a lot of other clubs, like the entrepreneurship club, sales club, uh,
Awesome.
planning club, communication club, Toastmasters. I helped
Oh my
found
gosh,
that.
you were busy.
It, yeah, there is usually one or two clubs a day
Oh my
as part of
gosh.
the ultimate frisbee team. Uh, but for all my free time outside of that, well, a lot of it was spent just reading a lot of white papers for these new ICOs and
Hmm.
comparing them to each other. Uh, 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 like sometimes on on the the bike in the gym, the stationary bike, I would just be like, I'd print out a white paper and just be reading it and pedaling.
Oh,
Um, it,
okay.
it, because like I had invested in like 30 ICOs that year, and uh, and they were doing great. Uh, and also I was really I I always gravitated towards the tokenomics part of the white papers.
Hmm.
I've been always been really interested in kind of how tokens work, what's possible to do with them, how do they make a project better than like equity or the traditional way, like what type of new opportunities that never existed before do tokens enable. And I was able to figure a lot of that out through reading the white papers and understanding all these different mechanisms that different founders and entrepreneurs were inventing. And then I started writing reports comparing the protocols to each other and analyzing them from like the tokenomics perspective, security perspective, the team, their backers, um, and kind of the consensus algorithm for like what makes transactions fast, what's the finality time, like for them to confirm and not be reversible, uh, and kind of understanding where the strengths and weaknesses of each protocol are. So
Got it.
yeah, so by the time I graduated college, and like giving presentations to the entrepreneurship club and investment club on how Bitcoin works, and the president of my school, like teaching him and having people come up to me in the cafeteria, being like, "Oh, hey, you're crypto Zach, right?" Like you're the crypto guy, and always enjoying the like bringing more people up to speed and helping them understand how it works besides just from the investment perspective, because a lot of people treat these like stocks, like they're just looking at the charts
Hmm.
without um, understanding the kind of the the power and meaningfulness of the technology that underlies it.
Hmm.
Um, when I graduated college, I I started. I was traveling. Well, even like junior senior year of college, I started traveling around the U.S. For crypto conferences and meeting the industry. And then when I graduated, I spent a month and a half traveling around Europe, uh, across 9 countries, planning the trip around crypto conferences, and meeting a lot of the figureheads of the industry, and like and just expanding my understanding of what brought other people into this space. What are they passionate about? Um,
Hmm.
and what the future of it looks like. Um, that Europe trip was great because I think my favorite conference was the Fellowship of the Ethereum Magicians conference. Well, not it was like a meetup with about 40-50 people, and everyone there were like founders of the top DeFi apps of the time, and core developers, and the ERC 721 standard was being formalized at that time, and some of the developers there were working on it. Um, and I gave a presentation on NFTs that year, because at the time before the 721 standard came out, the NFTs were kind of like hot potato games where you
Hmm.
had like crypto countries, crypto celebrities, and they're just images uh, uh, that automatically increase their price by 20% every time somebody bought it, and then the developer would take a 5% fee, and the last one holding it would kind of be holding the bag. And the crypto countries was crazy. Like those countries went up to like $1 million. Japan was the most valuable one, and then uh, and the crypto country's website kind of the developers rug pulled. The website got shut down, nobody could see their NFTs anymore.
Oh my
And
gosh.
OpenSea, it didn't support it. OpenSea was the only NFT exchange at the time.
Mm-hmm.
So the presentation that I gave that year in 2017 was like, how can we make these NFTs more permanent? Like how can we make these games last forever instead
Mm-hmm.
of being shut down when a website goes down with and totally losing the community and functionality. Um, and it, I think it still does have a lot to do with the front end, like whoever's routing, hosting the front end, like somebody still needs to do that. Even though the apps work, and not a lot of people. Well, there's no good user experience if you can't see the countries or like see the celebrity that you hold. Um, so the, and that's still a issue today, right? Like the front ends and routers are what a lot of the Clarity Act is focusing on. Um, uh, so I was traveling around the world trying to understand what I wanted to do in crypto
Mm-hmm.
for a year after I graduated. And realized it was at San Francisco Blockchain Week after I met a lot of the crypto VCs. I realized that what I was doing was already similar to what venture capital companies were doing. And I really enjoyed that. So I focused my job search on VC companies uh, and found Borderless uh, and joined as the first hire there. Uh, when we were helping develop the ecosystem for Algorand. And since then, Borderless expanded to 10 different funds. Like we made a cross chain ecosystem fund. And but by the way, I don't work for Borderless anymore. I left at the beginning of this year, and none of this is investment advice. It's just informational. Yeah, we made a cross-chain ecosystem fund. The three DPIN funds. We Borderless invested in more than 30 DPIN projects, which I think is more than any other fund has. Uh, and help bootstrap that ecosystem. I worked with a lot of the DPIN projects on their tokenomics. Um, and made a multi-strategy hedge fund. Last year, we invested in a lot of the digital asset treasuries companies, and which was kind of like a big wave which went on in crypto, where these shell companies would get acquired on the Nasdaq. Like there's this whole market for small companies that aren't really doing much and maybe have like one or two employees like working in a basement, but they become attractive as vehicles to acquire, to have to quickly get access to a public um, stock. So around like 50 or so DATs launched last year, which are led by kind of influential people, like famous people in crypto, and they would raise hundreds of millions of dollars or billions uh, to invest in Bitcoin or Ethereum or Solana, like all the blue chip stocks, or all the blue chip coins,
Mm-hmm.
and then just turn that into a public vehicle with the hope that it will trade at a premium
Mm-hmm.
to the value of the coins that they held, and that worked for a while, um, for actually around like 4 months of the boom. It started with MicroStrategy. They invented the model. Like Saylor, I have a lot of respect for how creative he got with the financial engineering to offer the best or the highest paying debt around the world. Like they're paying like 10% in USD for their debt, and using Bitcoin as the appreciating asset to pay those bills, which will work as long as Bitcoin doesn't crash like 85%. And then Metaplanet kind of copied what MicroStrategy was doing, and Metaplanet was based in Japan. And they have this. They were in the best position to launch a DAT because it gave Japanese investors a major tax break on the returns that they got from Bitcoin, because at the time and still now, the capital gains tax for crypto gains in Japan is 55%.
Ooh.
Yeah, and with equity, it's only 20 at tops.
Oh,
And
wow.
then you can put that in the Japanese IRA and make that 4% or zero. So there were meaningful benefits that investors got from holding an equity vehicle than over holding the native crypto.
Yeah.
So I've researched every country that could benefit from having equity or having these DATs over native crypto holdings, and help create a strategy for investing in those and identifying the market's most likely to outperform. So yeah,
Interesting.
um, yeah, that was one of the most recent things I got into at Borderless. I also specialized in tokenomics, and I learned that pretty soon after joining. Is that like I was really good at consulting companies and founders, helping them utilize their token the best way possible to maximize odds of success for their company. Um, I published an article called "Introduction to Tokenomics" on Medium in 2022, and that got shared around the industry, and like CZ, the founder of Binance, commented on it, saying it's a great article about the first day. And I think it set a lot of standards for the tokenomics world that still exists today. So I consulted more than 100 companies while working at Borderless, like portfolio companies, advising them on their tokenomics and helping them avoid mistakes, and also leverage all the utilities that you can in a token, customized to whatever the goals of the project were, and what they wanted from their community or users, because tokens are really good at incentivizing behavior. So really enjoyed that. And then at the beginning of this year, ever since the Genius Act, which is the stablecoin U.S. regulations, the first time the U.S. has ever legitimized stablecoins, and that happened in August. It got passed, and immediately I saw that this is going to be the highest topic over the next few years is tokenization, because there's many trillions of dollars, like 200 trillion if you include real estate, that is looking or that can be tokenized, and
Wow.
tokenization increases in efficiency for a lot of processes and reduces overhead expenses, and it makes things 24/7 transferable. Like you can settle in a couple of minutes, um, and it has potential to be more trustworthy than trusting a centralized company as well. So I left Borderless at the beginning of this year to start Tokenization Systems. It's tokenization.systems is the website, not .com. And Tokenization Systems is a advisory practice for people that are in companies that are designing tokenized products. And I over the last 5 months, I've published 8 papers that got on SSRN, the Social Science Research Network. One's under review by Frontiers in Blockchain, and also wrote 8 federal comment letters for the regulators like the FDIC and OCC, who regulate the banks. There's FinCEN, the Treasury, the NCUA, National Creditors Union, and Association. And I read, so there's 6 draft dockets, or there were last month, open for comments on the structure for stablecoin and mostly stablecoin regulation. And I identified a bunch of gaps in the current drafts, like new risk exposures that get opened up if they're not patched. So I commented on all 6 dockets, identifying these gaps and proposing fixes for them, and also creating a framework for diligence on tokenized assets. Ways to differentiate between these different types of like digital dollars and equity and like commodities, because they're not all the same. Like they're based in different countries. They operate by different laws, and they're going to fail differently under times of stress. But right now, there's not a standard way to measure and differentiate between all these dollars. And some exchanges are treating them all equal to $1 all the time, without telling their the people that actually own the dollars which one they hold. Like that Binance is doing that, where they have BlackRock builds and Benji, and there's one other tokenized dollar that they have that are all used as collateral on the Binance margin, the futures exchange, by institutional counterparties to do margin trading. But the person on the other side of the trade has no idea which one of these 3 stablecoins is backing their trade. So if one of the stablecoins goes bankrupt, or there's a liquidation or a depegs, the consumers have no idea which one they actually own, and there's no requirement to even disclose that. So there are gaps in the current laws that I didn't realize when I started this that I needed that needed to be patched. But when I left Borderless to focus on tokenization research, I went down this huge rabbit hole, and I broke through it, and just led me all the way to the law and consulting. So if you're a company that has some assets that you want to tokenize, please reach out. I'm happy to chat with you, and we can have an intro call. uh, and happy to help you structure your product and design the strategy for it, so you get distribution, but and also eliminate all the hidden risks that get exposed when you tokenize traditional finance asset. I've also got a newsletter on tokenization systems. It's www.tokenization.systems that you can sign up for, which gives monthly reports on the latest in regulation and tokenization, market developments, and also research that I've been publishing.
All right, amazing. Well, thank you for taking us through that. You have such an interesting story from just getting into investing at such a young age, and then your discovery of Bitcoin and how it led you to tokenization. And that's a really incredible stat you shared, 220 trillion of just opportunity there of how big this market can be and what the future might look like. So yeah, it's important to get tokenization models right. If there was one takeaway you would say, you've obviously published a lot of research papers in the last few months. Would you have like a takeaway for a project or a founder that you'd like to share when it comes to tokenization?
Yeah. So yeah, I'll bring it back to why I got into crypto in the first place, and thus it's because this technology provides a new platform or playing field that enables or provides more people or provides everybody with opportunities that they've never had before, opportunities for people to lift themselves up and improve their quality of life and improve the quality of life of everybody, like raise the floor. And uh, now I'm seeing that we're kind of at a crossroads again, because now we have the institutions coming in who uh, um, who uh, and we need to make a choice about whether we want to use this technology to maximize the benefit for yourself at the expense of everybody else, or use it to increase everybody's capabilities and quality of life. And right now, it can be designed either way. I've vouched for the one that helps everybody out because it's definitely possible, but it's also possible to use it to kind of eh, squeeze others if you can capture the market. Uh, but you could also capture the market while prioritizing the quality of life of everybody else and raising the floor for everybody, and still make a ton of money, maybe even more money in the long term because like poverty goes down and you spend less money on the issues that come from poverty. So yeah, the choice is up to you, but I hope you make the right one.
Yeah, I think that's a really great message to leave everyone with. Thank you so much for coming on today. It's been, like I said, just a really great chat, and it's been wonderful hearing your story and more about the work you're doing in this space and the incredible research that you published and made available. So yeah, can you remind us again where we can go to read more and about this?
Sure thing. www.tokenization.systems. I've got my whole research program published there, and comment letters for the regulators, and summaries of every paper that I've written. And I update it pretty consistently on a weekly basis, at least. Uh, so yeah, there's also a newsletter. If you're interested, you can just enter your email, sign up. And if you're interested in consulting or advisory, you can send me an email. It's on my website, and we can set up a intro call.
Okay, wonderful. All right. Thank you so much, Zach. This has been great.
Thanks for having me, Lindsay.
Okay, that's it for today's episode of Token for Your Thoughts. If you enjoyed the conversation, be sure to subscribe and follow the podcasts for more insights from the people shaping the future. We'll see you on the next episode.
All right.